Well, Happy New Year and welcome to another episode on a new year. It's January the 2nd. It's the holiday Monday after the Christmas break and limited trading on low volume in between since we last spoke. So let's take a look at the big picture and the smaller picture for the week ahead. Let's also have a look at, as this is the start of a new year. I like to take stock of things and push reset and just look at things with fresh eyes, because the danger as a trader is that you can get too married to ideas, particularly when you've hung your hat on them. And that's one of the most important things as a trader is to be able to say, when the facts change, you have to change. And there's the chart in your head, there's the chart that you want to see, and then there's the actual chart that you see. And one thing I see when I'm looking at this, as I'm looking ahead at the new year, if I was looking at this completely with fresh eyes, is that, this is, if I was following the system that I've created, this is the start of a new bull market. Now, having said that, I follow the chart, but I do so very cautiously. Because of several factors I've described before. But just because it's already been a long bull market doesn't mean to say it can't just carry on. And that's exactly what's going on here. This is a 5-year chart of the S&P 500. And, there's no question about that there. If I there was a channel that is trending upwards there, this market is in an upwards trend. So there's no getting away from that fact. Has it got ahead of itself? Has it, riding a bit high just of late? Yeah, absolutely. And can it correct? Yeah, absolutely. But bull markets often do. We only need to look at this recent bull market to see there's some very violent corrections on the way up. That's just normal. So that's what I see here when I look at the very big picture. I see, however crazy it may seem, this is the start of a new bull market, and the market is telling us, Mr. Market is saying, I'm going up. Big, longer term, big picture. I have to stick with that for now. And when things turn around the other way, particularly when the market gets below its 40-week moving average, then we'll reassess the situation. But right now, this whole Trump optimism seems to be gathering ahead of steam. So here's zooming in a little bit, and there's that undeniable uptrend powering higher, and of late just correcting down a little bit. And if it corrected down to 2190, something like that area on the S&P 500, that would be nothing. I mean, that would be nothing more than a healthy pullback, and that's what may happen in the week ahead. If we zoom in on the I'm going to commercial here, the daily chart, day-to-day action. So here you can see, there's been some selling volume picking up here and there, but that hasn't stopped this market in the past. Nothing that's really drastic. Here's the 200-day moving average. It bounced off of it just before the election, and right now this is very, very high above its 200-day, and it really does have to correct. Short term, it's hard to see this, come the January hangover, so to speak. It's hard to imagine this market not coming down at least to 2200. So what I see right now is longer term, I see the bullish trend, and shorter term, there's no immediate reason to say there's going to be a bearish correction, but it's looking more and more likely. So I will be in terms of in terms of stock picks, I will be looking to trade long, but looking things to buy. But perhaps I'm looking to get in at this stage in the game on the short term. I'm looking to get some alerts set so I can get in at nice entry levels when when the market does inevitably correct. So that's all for this week. I'll speak to you next time.